Welcome back to the Deep Dive. Today we are just cutting right through the noise on Summit Therapeutics Q3 2025 results.
And this wasn't just, a standard earnings call.
Not at all. It was a complete fire hose of clinical strategy, some really high-wire regulatory acts.
Oh, absolutely. And a very clear signal from management that they intend to go after a massive market no matter the cost.
And that's the tension, right? That's what we need to unpack here.
Exactly. Our mission today is to distill all this dense clinical data, especially around their main drug, ivonescimab, and then stack that up against the stark financial reality.
We have to figure out why management is so aggressively challenging the FDA's gold standard for approval.
And why the market, after seeing some truly impressive clinical results at ESMO, just sent the shares lower. It doesn't seem to add up at first glance.
It's that classic biotech risk-reward calculus, just, cranked up to 11. So let's start with the hard numbers. They give so much context for everything else we're about to talk about.
Absolutely. And you have to remember, this is a pre-commercial biotech. So revenue was, as you'd expect, zero.
Right.
For Q3 2025, the GAAP EPS came in at negative 31 cents. But the number everyone's really watching is the non-GAAP EPS.
And that was
negative 13 cents.
And that non-GAAP number is so critical, right? Because it strips out all the non-cash stuff and gives you a much cleaner look at the actual cash burn.
Precisely. And if you look at their non-GAAP operating expense, that OPEX figure was a whopping $103.4 million for the quarter.
Wow. That's the price tag for what? Going global and running all these huge Phase III trials at once?
That's it exactly. The main driver is R&D, $90.5 million, just poured directly into research and development.
Funding those big pivotal trials like HARMONi-3.
Right. And that brings us straight to the balance sheet. They ended the third quarter with $238.6 million in cash and short-term investments.
Hang on a second. If you're burning over $100 million a quarter, and you have just under $240 million in the bank.
The math is pretty simple, isn't it?
That gives them, what, 2, maybe 3 quarters of runway? At best.
At best. That is immediate, urgent pressure to find more cash, either a capital raise or some kind of big partnership.
And that pressure explains the market's reaction completely. You've got this incredible clinical data coming out, which we'll get to, data that should send a stock flying.
But it didn't. Shares dropped 4.5% after the call, and on heavy volume, too.
So the market wasn't looking at the 48% efficacy signal. They were looking at the cost of the race and the massive regulatory risk.
Exactly. And that regulatory risk is our first deep dive, this high-wire act with their lead drug, ivonescimab.
So what was the big announcement?
The big pivot was that management intends to file a biologics license application, a BLA, in Q4 of 2025.
Okay, and this is for ivonescimab with chemotherapy.
Correct. Specifically in patients with EGFR mutant non-small cell lung cancer who've already progressed on a previous treatment.
So let's just pause on that. A TKI, a tyrosine kinase inhibitor, that's one of those targeted pills. They're amazing, but patients eventually develop resistance. So this is a second-line setting, which is much, much harder to treat.
Exactly. And that's the tension point. For the FDA, historically, in this setting, they want to see a statistically significant benefit in overall survival, or OS. That's the gold standard.
And Summit doesn't have that yet.
Management admitted on the call that they have not hit that OS significance threshold.
So they are actively choosing to file right now, knowing they're defying what the FDA usually requires. I mean, is that strategic conviction or is that desperation because the cash is running out?
Well, management argues it is pure conviction. They say it's based on the totality of the data.
Okay, so what does that mean?
They're pointing to the incredibly strong progression-free survival, or PFS, the good safety profile, and the fact that the results were consistent everywhere they ran the trial.
So they're basically saying, hey, we know OS isn't there yet, but look at everything else. This is enough.
That's the argument. They believe it's enough to merit a submission and a full review, even while that OS data is still maturing.
Do they have any precedent for this? Any reason to think the FDA will play ball?
They leaned on that hard during the call. They pointed to a couple of other drugs in the space, amivantamab and datopotamab deruxtecan.
Right.
And they noted that neither of those drugs had a statistically significant OS benefit when they were initially approved. So they're arguing the FDA has shown flexibility before and should show it again here.
And the immediate result they're hanging their hat on is pretty impressive.
It is. The HARMONi study showed that ivonescimab cut the risk of the cancer progressing or death by 48% versus chemo. A hazard ratio of 0.52 is, frankly, a phenomenal signal in second-line lung cancer.
So if that BLA gets accepted, and we'll know within 60 days of them filing it, that's a huge catalyst.
A massive one. But the market skepticism is completely warranted. I mean, if the FDA comes back with a refuse to file letter...
That would be devastating. It wastes hundreds of millions of dollars and so much time. It's really the highest stakes poker game in biotech right now.
It really is. Now let's pivot to the clinical data that's backing this huge bet. Because beyond the BLA, we got a ton of new results around the ESMO conference from their China partner, Akeso.
This was the HARMONi-6 study, right? In a different group of patients.
A very challenging group. First-line, advanced squamous non-small cell lung cancer. This is where ivonescimab really starts to show its differentiation.
Remind us again, this is a bispecific antibody. What does that mean?
So it's not just targeting the PD-1 immune checkpoint like Keytruda, it's also hitting something called VEGF, which helps tumors grow the blood vessels they need to survive.
So it's a two-pronged attack in one molecule.
Exactly. And the results in this high-risk squamous population, they were overwhelmingly positive.
How positive?
The trial compared ivonescimab plus chemo to a standard PD-1 inhibitor plus chemo. It hit its primary endpoint, a big win on progression-free survival with a hazard ratio of 0.60.
So translate that for us. What does 0.60 mean in, real terms for a patient?
It means the median PFS for patients on ivonescimab was 11.14 months. The control arm was only 6.9 months.
Wow, that's a gain of over 4 months of progression-free life. In the frontline setting, that's massive. That should absolutely get the attention of oncologists.
It should. But here's the kicker. Targeting VEGF has historically been really dangerous in this type of lung cancer.
Because of the bleeding risk, right. These tumors are often near major blood vessels.
Exactly. Anti-VEGF drugs can cause serious hemorrhages. So the question becomes, how did ivonescimab do on safety? Because that's the real test for a bispecific like this.
Yeah.
And that's the point management just hammered home over and over. They highlighted a very favorable safety profile, especially the low rate of serious bleeding events. Grade 3 or higher hemorrhage was under 2%.
Under 2%, that's really low.
It's incredibly low. And they argue this is what clearly separates their drug from just, combining two different antibodies, which has always struggled in this exact setting because of that bleeding risk.
So the thesis is their unique molecule gives you the anti-VEGF punch without the dangerous side effects.
Precisely. And that benefit was seen across all patients, no matter their PD-L1 level. In fact, it was a little bit better in the PD-L1 negative patients, which really suggests that VEGF component is doing some heavy lifting.
And they're not even slowing down to wait for the BLA. They're just pushing forward.
Pushing forward aggressively. They announced a brand new global Phase III study, HARMONi-GI3. It's already starting up U.S. sites this quarter.
And this one is for colorectal cancer.
Yep. First-line metastatic colorectal cancer, or CRC, specifically in a group called microsatellite stable patients, MSS-CRC.
That is an incredibly bold move. MSS-CRC is a huge unmet need. These patients just don't respond well to the standard immunotherapies.
They don't. But the reason they're so confident, the reason they're launching a global trial, comes from some, frankly, astounding earlier Phase II data.
How astounding.
In a small group of 22 patients, they saw an 81.8% overall response rate.
81.8% in MSS colorectal cancer. That's staggering.
It's the kind of signal that makes you bet the farm. It absolutely justifies accelerating into Phase III, even with the cash constraints.
And it's not stopping there, is it?
Not at all. They promised we'll get details on more global Phase III trials in Q1 of 2026. Think breast cancer, head and neck cancer. They believe they're sitting on a true platform drug.
Which brings us, unavoidably, to our third deep dive. How on earth do they pay for all of this? The financing question is everything here.
As we said, the burn rate is intense. $103 million in quarterly OPEX against $238 million in cash.
So they have to raise capital.
And soon.
Very soon. Definitely before the middle of 2026. Management was actually pretty direct about this on the call.
What did they say their options were? Well, they acknowledged they have an existing at-the-market facility, an ATM, which lets them sell shares directly into the market. They said they have about $350 million available on that.
Is using an ATM a sign of confidence, or is it more of a last resort? It feels a bit like a last resort.
It often is, but they framed it as an opportunistic necessity. They mentioned inbound interest from partners, but they made it clear they want to go it alone to maintain control, even if it means diluting shareholders in the short term.
They're betting the value they create by getting these trials running will far outweigh the cost of that dilution.
That's the bet. And that confidence is driving what is maybe their most clever strategic move yet, the change they made to their pivotal frontline lung cancer study, HARMONi-3.
This is the one comparing ivonescimab to Keytruda, the current standard of care.
That's the one. And this change is huge from a regulatory standpoint. They've split the trial into two completely independent groups based on the cancer histology. So one for squamous, one for non-squamous.
And they boosted the total size to about 1,600 patients.
Right. And splitting the cohorts is the critical move. It's a major de-risking event.
How so? What risk does that actually mitigate?
Think of it like running two separate races under one banner. The FDA wants to see an analysis of everyone you intended to treat. So historically, if one subgroup in your trial fails, it can statistically drag down the entire study and sink the whole approval.
I see.
By creating two independent, fully powered analyses, the potential failure of, say, the non-squamous group has zero statistical impact on the squamous group.
And based on the HARMONi-6 data we just discussed, that squamous group is looking incredibly strong.
Exceptionally strong. So it massively reduces their regulatory risk for at least half the trial. And as a bonus, it allows for an earlier readout.
Well,
The PFS data for that de-risked squamous cohort is now expected in the second half of 2026. It's a brilliant move to speed things up and reduce the binary risk of a giant trial like this.
so connecting this all back for you, the investor, the near term is all about regulatory news and financing moves.
Completely. You're watching for that Q4 BLA submission, then the 60-day FDA acceptance decision, and then the details of that big Phase III expansion in Q1 2026. Those are the flashpoints.
And this stock is famously volatile. I mean, the 3-year return is over 1,500%, just massive.
But over the last year, it's actually down 5.5% while the S&P surged, and that tells you everything you need to know about the current level of skepticism.
The divergence couldn't be clearer, could it? Management is acting fast, they're confident, they're willing to challenge the FDA.
But the market is pricing in the risk that the FDA says no, and it's pricing in the certainty of major dilution coming down the pike.
Which takes us to our final segment. This is not financial advice, but let's put on the hat of an aggressive hedge fund analyst pitching a trade based on this exact situation.
Okay, so given all this volatility around the BLA submission, the market is already pricing in a huge move.
Yeah.
The options market, the implied volatility, is suggesting the stock could swing up or down by over 21% on the news.
But you think the real move could be even bigger than that?
We think the surprise could be far greater. We're betting on the magnitude of the shockwave, not which direction it goes.
Okay, lay out the trade.
We propose a high-risk, high-reward long straddle. You'd target the option expiration that lines up with that BLA acceptance decision period, so probably Q1 2026.
A long straddle. So you're buying both a call option and a put option.
Exactly. You profit if the stock moves violently in either direction.
So if the FDA issues the refuse to file letter, the stock creators, the put option pays off big.
Far beyond that implied 21% drop, potentially. Conversely, if the FDA completely surprises everyone, accepts the filing, and maybe even grants a priority review, the stock could just explode higher.
And the call option pays off.
The thesis is simple. This BLA gamble is too critical. The news, good or bad, will be explosive enough to break that current IV ceiling. It's a pure volatility play on regulatory courage.
So to wrap this all up, we have a company taking an incredibly high-stakes gamble. They're filing their BLA now without the RS signal, but they're backing it with stellar clinical data and these staggering early CRC results.
But all of this is happening against that undeniable backdrop of needing a lot more money, and very soon. The core conflict is the FDA's bar for approval. This entire story hinges on that regulatory decision.
So here's the final provocative thought we want to leave you with.
If Summit is actually successful here, if they get this BLA accepted and maybe even approved based on this PFS and safety data, what kind of precedent does that set for every other oncology company out there?
Could this effectively lower that traditional overall survival bar?
And fundamentally redefine the risk tolerance for novel combination therapies in these super competitive settings? It's a huge question.
That would change the entire biotech playbook overnight. Thank you for diving deep with us today.
We'll catch you on the next one.